Welcome everyone, and thank you for joining us for today's webinar. My name is Ophelia Amauni. I am the Digital Financial Services Expert for the United Nations Capital Development Fund based in Accra, and I'll be your moderator for today. A quick run through our agenda. I'll start off with the housekeeping rules and then speak about UNCDF and its work in Ghana, and then shed some light on the collaboration between UNCDF and 8Geeks, and then hand over to our guests from 8Geeks to present on the webinar topic, Navigating the Regulatory Landscape for Fintech Startups in Ghana. After their presentation, we'll go into a Q&A session and answer questions from attendees. A few housekeeping rules. Since we are using the webinar function of Zoom, I'll kindly ask that attendees click on the Q&A icon in the webinar controls at the bottom of the window to submit their questions. Questions will be visible by all attendees, and the host and speakers will reply to your questions orally or by message. About the UNCDF. UNCDF offers last mile financing that unlocks public and private resources at a domestic level and to reduce poverty and support local economic development. We do this by partnering with private and public stakeholders to unlock market constraints and leverage innovation and technology to build inclusive economies that serve the UN Sustainable Development Goals. Our vision is to promote a digital economy that leaves no one behind, with the aim of reaching millions by 2024 in the use of innovative digital services. The strategy of leaving no one behind in the digital era is based over a decade of experience in digital finance in Africa, Asia, and Pacific. And UNCDF recognizes that reaching the full digital potential will support the SDGs to align its goals to leaving no one behind. In Ghana, UNCDF is active under the Boosting Green Employment and Enterprise Opportunities Green Project. This project is funded by the European Union Trust Fund for Africa, targeting youth, women, and returning migrants in Ashanti and Western region. This project is being co-implemented by SNP. UNCDF is responsible for results 1 and 3, which is supporting green and resilient local economies, and result 3, which is access to finance. SNB supports result 2, which is skills development, and result 4, which is incubation and acceleration of SMEs. Under the access to finance components, UNCDF offers 4 main areas of intervention: financial education, financial services, remittance-linked services, and crowdfunding. Through its technical and funding facilities, UNCDF engages a range of financial service providers to offer innovative payments, savings, loans, financial education, and remittance-linked services to cash for work beneficiaries and beyond. We do this by working with 10 districts in Ashanti and Western region to expand financial access and to develop a financial ecosystem at the local level. Through the project, we've made some great strides against the target.
Ophelia, hi, sorry, can you speak it louder because we hear a noise and I think it's your mic because everybody is on mute. So if you can speak louder, the audience is saying that they are hearing interference with your mic. Thank you very much.
Okay. Is it better? Because is it better? Are you still getting interference?
Yes, I think something is close to your mic and might cause some interference. Please go ahead.
All right, thank you. Please let me know if it's better. So at this point, we are halfway through the project and we have achieved these results against the targets for the project, which comes to an end in 2023. We're targeting to reach 70,000 clients through financial education, financial access, and we currently have 68,000 registered clients against 56,000 active clients. We are still working on our youth targets, which is not where we want it to be, but eventually we hope that we'll be able to push the targets up to between 60 to 80% youth. And then on the women targets, we seem to be doing well, and we want to improve on that as well. In terms of clients with improved skills and capacities, our target is to reach 70,000, and we're currently at 21,000. In terms of savings mobilized, our target is 1.4 million euros, and we have raised 575,000 USD. Our loan portfolio is also growing gradually. We have given out 68,000 US dollars in loans against a target of 1.7 million euros. Areas of improvement and where we're looking to improve on in the coming months is in the mobilization of diaspora funds through crowdfunding. And we have identified some partners that we hope will help us to achieve that. In terms of the collaboration between UNCDF and 8 Geeks, UNCDF, in supporting its fintech ecosystem in Ghana, identified regulatory compliance as one key area that needed support and intervention. So to address this, UNCDF, in partnership with 8 Geeks, collaborated to offer technical assistance to our UNCDF partners to address some of the challenges they face in terms of regulatory and framework application to their innovative solutions. The technical assistance also provided UNCDF partners the support that they needed to be able to be compliant in the country. And through this partnership, we want to be able to inform the ecosystem on practices that will enable policy framework for fintechs through knowledge sharing events like what we are having today. So at this point, I will hand over to the team from 8 Geeks, Emmanuel and Jesse, to take over and take us through their presentation today. Thank you.
Hi. Thank you very much, Ophelia, and the UNCDF team. Sorry, can everybody hear me? Sorry, we're just trying to.
Yes, we can.
Screen share. Sorry, can you see my screen yet?
Not yet.
Okay. Some difficulties. Please give us a second. Any luck now? No.
Oh. You can send it to me as well. I can try and share from my own.
Yes, I think we're just. Can you see our screen now?
Yes.
Sorry, can you see our screen now?
Yes, we can.
Okay, fantastic. Hi, everybody. My name is Emmanuel Sam. I'm the team lead from 8 Geeks. I'm the head of the corporate and commercial team. I'm here with my colleague, Jesse Abugri. She's an attorney from our regulatory and financing team. Thank you so much, firstly, to UNCDF for this opportunity to share knowledge, to get everything we need done. I'll take the opportunity to also introduce my firm. I work in a firm, 8 Geeks at Law. We are Ghana's premier technology firm. We are specialists, a full service law firm based here in Accra. Anything that involves technology, we are the guys to go to. We have 2 main teams, a corporate and commercial team that I lead, and a regulatory and licensing team that is led by my colleague. Today, we have the singular honor of taking us through the licensing and regulatory framework for fintechs, and we'll start there. So today we are navigating the fintech and regulatory landscape in Ghana. And this is for the purposes of understanding, this is the content of our presentation. So the first one is, what is fintech? We are trying to situate the conversation clearly inside the scope of financial technology. It can get very murky waters, and we want to make sure this conversation is specifically in the financial technology space. We'll have an overview of the history of regulation in Ghana briefly. We'll look at the relevant statutes that apply to financial technology, in particular in Ghana. We've divided the financial regulatory regime for fintechs into 6 main areas. The first one being payments, the second one being credit and lending, third one being deposits, fourth one being investments, the fifth being insurance. We'll also discuss the Sandbox regime that some of the regulators have for innovative ideas that are novel or unheard of. And then we'll delve into things you should know as a startup when you're incorporating. So corporate governance issues, shareholding issues, what your regulations should say. And then we'll finish with all the other matters that a fintech that is a startup needs to know. So if we may take off. So by way of introduction, the question we get quite often is, we know what technology is, but what is financial technology specifically? Fintech is generally, or refers to, the broad range of technology and innovations in the financial sector that either enhance or change the way financial services are provided. Now, why we chose this specific definition for fintech is because there's a divide in the space as to what fintech is. People say fintech has come to challenge conventional financial services. Other people are saying that fintech is just a way of integrating technology in the provision of financial services. Why we say that is because we see things like mobile money that have come to challenge conventional banking and has formed a source of savings for some people compared to their banking or the non-bank. And we see other things like ATM machines and ATM cards, which are also used to facilitate the provision of financial services. But either side of the argument that you are, fintech is just here to enhance or change financial services that are provided. The fintech space goes a long way. It could either be payments as we know it, remittance. Everybody has an odd cousin or auntie that's abroad that if they send us foreign currency, we don't have a problem with. We are looking at the rise of blockchain and cryptocurrency, robo advising. All these things are inside the sphere. So like I said, we're going to discuss sort of the history of financial technology in Ghana. For those that are old enough to remember, one of the earliest forays into the financial technology space was in 1998 when SGSSB introduced the Sika card at the time. I think my colleague Jesse wasn't old enough to remember, but the Sika card at the time in 1998 was introduced. It was the first attempt at a more sort of progressive financial services provision. After that, we have seen a series of movements in that direction. Again, Standard Chartered started installing ATMs in 2001. For those that can remember, eSwitch, the government implemented eSwitch in 2008. I find out today that certain national service personnel still use eSwitch cards. And then we saw the advent of mobile money. I was looking at the mobile money advert recently, and I was thinking to myself, if we had known at the time that this piece of technology will change the face of finance, I'm sure many of us would have looked at it different. We just thought it was a fun jingle, and we all enjoyed it. But that has been sort of, from the commercial standpoint, the evolution of financial technology to where it is today, that everybody has a mobile phone that they're able to use at their fingertips. In terms of the regulation of financial technology, from a legal point of view, we have seen different aspects of it at play. We've seen the Payment Systems Act in 2003. And as you get along, you'll see that I discuss payments specifically as an aspect of financial technology. And please, if I'm going too fast, please also prompt me. I'm the only lawyer you'll meet who doesn't like talking, so please work with me. But if we'll also see that as the thing you'll see with financial technology and technology generally, it continues to move at exponential rates. One of the things that regulators have struggled with across the world is the ability to keep up with the change. If you know anything about the passing of legislation in Ghana, you know we have to go to Parliament, first reading, second reading, third reading, arguments, all and back and forth, which could take several years. The move of financial technology and technology generally has meant that regulators have to keep changing very quickly to adapt. So we started with the Payment Systems Act in 2003. The Bank of Ghana also issued branchless banking guidelines. We went to, as electronic money became a big thing, they issued the guidelines for e-money issuers. And more recently, this is where we'll start off, we have seen the Payment Systems Act, which came last year to replace the previous Payment System Act, or sort of, we had Act 662. Now, it's a very important point I must make here, that financial technology is not only payments. Payments is an aspect of financial technology. However, what we found is that the other aspects of financial technology may already have legislative framework, some of which we will discuss today. But because payments were moving so fast, electronic money was moving quickly, aggregators were coming into the space, people were looking to issue cards, all these kind of things. We had a specific legislation for the first time in Ghana that covered payment systems and services in the country. So generally, looking at our regulatory landscape today in Ghana, we have at a high level, there are other smaller market players and stuff, but the main regulators, again, depending on what you do, the first one, as you will find out consistently, is the Bank of Ghana. So if you're an entity regulated under the Payment Systems Act, because you are doing payments, you are going to go to the Fintech and Innovation Department of the Bank of Ghana, and then we'll come to that. You'll also see in our discussions as we go along that if you are providing lending or deposit taking as part of your financial technology, you fall within the purview of the Bank of Ghana. More recently, as our markets open up and continue to develop, you'll see that people are offering financial technology where securities are offered to people, trading of securities, debt and equity securities in the market. Usually for stuff like that, you'll find yourself in the hands of the Securities and Exchange Commission. More recently, we are seeing what we are calling InsurTech. I will discuss this later on as I go further. It's the inclusion of technology in insurance that allows more efficient sort of insurance process. And I'll discuss this later. So you'll see now people are using facial recognition to determine life expectancies for the purposes of underwriting insurance policies and stuff like that. Fortunately now, our new Insurance Act has provided specific legislation that covers this particular area, and we'll deal with it as well. We also see in our regulatory landscape for the first time that one or more than one regulator is also taking charge of regulating specific spaces. So this is what we are looking to tackle or handle today. In terms of the relevant statutes, I'll come to them. Like I said, the payment systems for payments generally, Act 987 we got recently, the Banks and Specialized Deposit Taking Institution Act, Non-Bank Financial Institutions Act, the Securities and Industry Act for the SEC, the Insurance Act, the Cybersecurity Act. Now, to bring us back, like we said, our objective here today is simply to have a high-level understanding of what is the regulatory space for startup companies. What do they need to know at a high level, and how is that going to be helpful for them? So we start here. For fintech regulatory regimes in Ghana, if you don't remember anything I say today, please remember this. What you do will determine where you go. I guess this is advice that is true in life generally, but even more pertinent in fintech regulations. And I explain it as this. When it comes down to understanding the nature of the regulatory framework in which you are going to be able to play or going to be required to play, it is the nature of your offering. And when I say offering in this case, we say locally, and yeah, for a ball, it's not the offering you give on a Sunday. It's the nature of what you are providing, the service you're providing, the technology you're providing, or even the business model that you are giving out. That is going to be the key component in which regulator you go. What we find here at 8 Geeks is sometimes clients come to us, they could have a series of offerings. They could be providing 3 or 4 different things as part of their technology. If they're providing maybe 5 things, 4 of them will usually not or possibly not be regulated. However, there could be a 5th offering that by virtue of their technology or their algorithm automatically triggers licensing or regulatory overview. So it's always important. And please remember this, what you do, the offering that you give will determine which regulator that you are going to go to. So now we'll turn to payments specifically, and we'll discuss each of them in turn. We'll do payments, we'll do lending, deposit taking, insurance, investment. Payments has been, as I have, and we say quite often, has been the biggest player recently in Ghanaian financial technology space. As you know, mobile money has taken over the unbanked. We have aggregators, I mean, like Express Pay, even the mobile money space. We had the traditional telcos. Now we have GCB, we have ZPay, we have a few other players in the space. We also have a lot of aggregators, Express Pay, all these other people that have come and are looking for a sort of, as it were, piece of the payment system pie. So what we want you to remember, and we will show in the next slide, is that the Bank of Ghana has provided a list of permissible activities. The nature of your permissible activity will determine whether or not you go to the Bank of Ghana at all, and the nature of the license you're going to get, right, for payments. Now, prior to the Payment Systems and Services Act and then the Bank of Ghana, previously payments were handled by the Payment Systems Department of the Bank of Ghana. In the last couple of years, the Bank of Ghana has set up the Fintech and Innovation Department of the Bank of Ghana that is responsible for electronic money issuers, payment service providers, closed-loop products, payment solutions, and all other emerging forms of payments that are delivered by non-banking entities. Now, if you think about it, back in the day, most of the payment systems and procedures were offered by banks. Suddenly, with the movement of financial technology, there are more and more and even more entities that are not banks that are providing payment systems and solutions. What the Bank of Ghana has done now is that if you're providing, especially based on the nature of your solution, if you're providing a payment system or payment solution, the Bank of Ghana and the Fintech and Innovation Department of the Bank of Ghana regulates you, and you need to get a license. Now, I'll take a second here and sort of address this as it is. Now, there are 2 main categories for payments in Ghana. The first one, as many of you will know, are the electronic money issuers. Now, the electronic money issuers are, or for the longest time, were the telcos that we knew. So MTN, I think I'm allowed to mention their names here. MTN, Airtel, we had Tigo, we had Vodafone. They were the ones that essentially controlled the electronic money space. Now, with the Payment Systems Act and the new regulations that are around the telcos, around electronic money issuers, more and more players have come. And I'll show you what the permissible activities of electronic money issuers are in the next slide. Apart from electronic money issuers, we have another subset called payment service providers. Now, these payment service providers are essentially other payments or payment processing entities that do not provide for electronic money, but have a software or an algorithm or a solution that allows for payments to happen. So for instance, we have the aggregators, for instance, that is a simple software where you have different companies that come on. You can just jump on the software and make payments. You have people that terminate onto wallets. All these kind of solutions are covered under the payment service providers subset of the payment service, the PSSA. So if I may, this, and we'll also share this on our LinkedIn, 8Geeks LinkedIn. We'll also provide it for the UNCDF to share, which sets out all the licensing categories, the amounts involved for licensing, anything that is relevant to payments. Now, I want us to look at this and treat this like, if anyone here drives, if you look at the back of your driver's license, you will see that there are different sort of classes of activities that you can undertake in your license. So for instance, I think class A allows you to drive little mopeds and, you know, scurry around the city if that's your thing. Class B is what most of us have, which allows us to drive regular commercial cars. Class C and D are for more or much bigger vehicles up to a certain amount. Class E, much bigger. Class F for vehicles over 8,000. I want us to view this in sort of the similar way. So at the very top of it are the e-money issuers, the people that we know as, you know, the mobile money operators or dedicated mobile money operators. Now, if you are a startup, and I'll explain how much you need to be able to get it. If you are a startup, and by virtue of what you do, for instance, you plan to create or manage wallets. I'm sure everybody here at some point or the other has had some interplay with mobile money. So you will have a situation where you want to create wallets. You want to allow people to put money on their wallets. You want to do cash in, cash out, as some of us have done many times. You want to do wallet-based domestic money transfer, or you want to do investment, savings, credits, and insurance in association with licensed entities. You will need a dedicated e-money issuer license. And I'll explain what is going to involve. But for this particular category of e-money issuer license, the minimum capital requirement is 20 million cedis. And it's sort of the biggest class for payments and payments processor. It's, let's call it the class F of licenses in this particular case. It's considered by some to be the big boy license of all of them. But if that is what you want to do, you need to go through the application process with the Bank of Ghana. You need to meet the minimum capital requirement. The Bank of Ghana is currently undertaking integrity capital, where instead of pumping all your minimum capital into your company, the Bank of Ghana holds some of your funds in an account at the Bank of Ghana for the purposes of meeting your minimum capital. So that is one and the biggest class. That's the e-money issuers. That's our MTN, Airtel, Tigo, ZPay, I think GCB, and the rest. Now, just below that particular class, which is 20 million, we have payment service provider scheme. The payment service provider scheme is a smaller, or I guess let me call it a different category. So if ever you want to do domestic card brands, we know we have the Ghana Link as we know it. For people looking to domestic card brands, switching and routing of payment transaction and instructions, you will need to go for the payment service provider scheme. And again, we'll share this. And please, 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 just for the purposes of clarification, this is a high level, this is a webinar. We want to be very careful to not see it as pure legal advice. If you have any questions, please speak to a lawyer directly, explain what you want to do, and then get clarity. This is a webinar for everybody. But yes, so the second category for people that are doing payments are domestic card brand associations. The minimum capital I'll show you is 8 million for them. 8 million cedis. Like I said, it needs to be kept with the Bank of Ghana to a certain extent as integrity capital, I believe half of it. The third category that you will find is the payment service provider enhanced. This is actually the category that we have come to see have a lot of market players in it. This is, again, I'm only dealing with people dealing in the payment systems of the regulatory landscape. So for instance, anything that's permissible under a medium license, we'll see. Anything that has to do with payment processing. So you'll find people startup that are interested in processing payments, whatever it takes at the back end. So whenever you put your card in, for instance, the back end transaction that you go on, there are many startups that are interested in doing that. Certain startups want to print and personalize AMV cards, provide third-party gateway services. All these things are covered under a payment service provider enhanced license. Now, the other category, and let me just sort of bullet through, we'll provide the link to this and everything that the Bank of Ghana has for payment service on our LinkedIn and to the UNCDF, and we'll circulate that as well. So the other category under the payment service provider is the medium license. Now, this one you find usually people that get medium licenses connect to Enhance to be able to offer some of their services. So people that want to deploy POS machines, mobile payment apps, all those things will need to get a payment service provider medium license. Then we have the standard license, which connects to an enhanced as well. We won't be able to go into that. The key point about the standard license is that this license category is reserved for only Ghanaians. And I'll discuss the local participation shortly. Then finally, we have a more recent addition by a notice of the Bank of Ghana that the payment and financial technology service provider. So if you have an algorithm or an app that does KYC, that's know your customer due diligence for a bank or for any other service, you do fraud management, AML, CFT centralized platform, you will need a payment and financial technology service provider license. Now, one of the key points on payments that I'd like to address at this point is that, for everybody's knowledge, under the Payment Systems Act in Ghana, and my colleague Jesse will address that as well, you need 30% local participation to be able to get a license. What does this mean? It means that before you can get any of these licenses that you see, 30% of your company must be owned by Ghanaians. Now, this is a very, very interesting point. And when you read the Hansard and the parliamentary debates on this, the logic was very simple. The financial technology space is moving at exponential rates. There's a lot of money involved. The Parliament of Ghana and the government of Ghana was determined to ensure that Ghanaians got, as it were, a piece of the pie. So no company can come into Ghana. So I also say this because for startups, when you are incorporating, you need to make sure that you meet the shareholding requirements, corporate governance requirements, all of that. If you want to do payment processing, then you must ensure that 30% of your company, unless you're going for a standard, but 30% of your company must be owned by Ghanaians. Now think about it this way. For startups, it may be easier to do, but for some of the bigger market players who just want to come in here to Ghana and do, payment processing, for some of them, they have no real need for a Ghanaian. However, if they don't comply with this, the Bank of Ghana is not going to give them the license. And one of the things we see day in, day out at 8 Gigs is some of our clients trying to comply with it. So this is something I want us to keep in our minds for the purposes of payment processing. Your company needs to have 30% Ghanaian ownership. So if you have a partner, for instance, that is offering you 10% and you're a Ghanaian, please go and tell them that, listen, I didn't make the law. We have to find 30%. Right? Or else the Bank of Ghana is not going to give us the license that we require. So this is for payment processing specifically. And out here, like we said, we'll share this for your understanding. If you can see from here, if you're going for a dedicated e-money issuer license, your minimum capital must be 20 million cedis. If you're going for a payment system provider scheme, your minimum capital must be 8 million cedis. If you're going for an enhanced license, your minimum capital will be 2 million cedis. If you're going for a medium license, your minimum capital is 800,000. If you're going for a standard or a PFTSP license, there's no minimum capital, and you'll be able to get the license without showing the Bank of Ghana that is what is needed. Just by it, you see the processing fees. The license fees for a dedicated e-money issue are paid annually, 100,000 for a scheme, 90. 40 for an enhanced, 15,000 for medium, 1,000 for a standard, and 20,000 for a PFTSP license. Now, that is sort of a high level idea of payment processing. Like I've said at the beginning, fintech is a plethora of ideas, business options, models, products that enhance financial services. Like we said earlier as well, it's very easy to think that fintech is generally just processing. But what you must always do is break down what your core business is, okay? As a startup, you must ask yourself, what is my core business? You will find that sometimes your core business requires a license that is not a payment processing license, even though you will be doing payment processing, and then we'll explain this in the next slide. So here we turn to situations where you as a startup are dealing with credit or providing loans or taking deposits. After the payment sector of financial technology, the second biggest sector for financial technology in Africa is the lending space. What we are seeing is that we are seeing more and more companies who don't have brick and mortar branches, as it were, and just have applications which you can just go on. Maybe I'm giving people advice for potential startups. I don't think that's why I came here, but you get the point, where you have companies, some of our clients just have applications, right? They are not processing payments. They just have an application. You can log onto the application. You can put in your loan details or your loan requirements, and a loan can be disbursed between 2 to 5 hours, sometimes over 24 hours. You will see that before the advent of this kind of financial technology, if someone wanted money, they'll probably go into the microcredit office, sit down and fill a form, or the microcredit agent will come to your SME or your shop. They sit down, fill a form, and tell you to come and pay back once a week, once every month. But fintech is changing the face of that. Now, what we're seeing is that once your core business, and please, like I said, if you don't remember anything, please remember that what you do will determine where you go. If your core business is lending, or your core business involves deposit taking. So for instance, if you look in England and other places, we are seeing that there are banks or financial institutions that don't have branches, right? They are digital banks, solely digital banks, where you either load the money onto your bank account through payment processors, or you go into their agent branches and deposit, right? They have maybe just one office. You can't go and chase anyone that you want to disturb them, none of that. When your core business is either lending or deposit taking, you will need a separate license, and we'll discuss it here to give you an idea of what you need. So let me give you an overview. In Ghana, when it comes to financial institutions, at the very apex of all financial institutions, as we know, are the commercial banks that we know, right? They are the big boys. They are the biggest minimum capital requirements. They have branches all over the city and the country. Just below them, as it were, we know the savings and loans entities, or as we call them, tier one. And just below savings and loans, we have the microfinance institutions, as we know them also to be tier two institutions. Now, these three institutions are the only institutions that are licensed to take deposits. What does that mean? That means if your financial technology, your fintech, is going to take people's money as deposits, then you need this license. Now we'll explain that it is possible for a fintech a payment processor or e-money issuer to take deposits similar, but we'll explain that in the next slide. But to be clear, if you are taking deposits, your model, for instance, you have a digital bank and you want to take deposits, then you will need a deposit taking license. Please, I'd like to be clear. You will not go into the PSSA and go and foray looking for payments and payment processors and e-money issues. You will need to get a deposit taking license. So for instance, we at EGL here also see situations where we have clients coming into Ghana whose business model allows or requires them to take deposits. What we do is we advise them that you can either go to the Bank of Ghana and go and get a license if the bank is issuing new license, Or alternatively, you can acquire an entity that has the license to do that. Now, what you cannot do is go and collect deposits without the license to do so. And that is very, very, very important, because sometimes you find people that try and fly under the radar. The Bank of Ghana will come down with fire and brimstone on your neck, and we can't have that. So please, like I said, always think about what you are trying to do, and then you will know what you need to get. If you are taking deposits, you are not doing any payment processing, then you have a separate regime to be able to do that. So here in Ghana, only banks and specialized deposit-taking institutions are permitted to accept deposits from the public. So if you are a startup and you want to have a digital bank, please, please, please make sure you have a deposit-taking license. Please don't go and take anybody's money, make any promises, and come and say the guy from EGL said you can take the money, please. This is, my liability doesn't cover that problem, please. But you get the point. Ensure that if your core business model requires you to take deposits, you take that. Like I said earlier, a fintech company needs to be licensed as one of those financial institutions to accept deposits from the public. However, some categories of institutions have specific restrictions. I'll explain, and if I can go back. Banks can be owned by anybody, Ghanaian or non-Ghanaian. Savings and loans can be owned by anybody, Ghanaian or non-Ghanaian. However, microfinance institutions are restricted to only Ghanaians. Explain again. The shareholders of a microfinance institution are limited to only Ghanaians. What does that mean? And I'm saying this because there may be people on this call or startups who have foreign investors. Some of them are local investors, are looking at getting foreign capital. If you want to do deposits and you anticipate acquiring, for instance, or going for a license where you're going to have foreign shareholding, then you will not be able to go for a microfinance tier 2 license. You can't go if you have the money and you're about it, you can go and buy a bank. If you don't want to buy a bank, then you can come and get a savings and loans. However, microfinance institutions are limited to only Ghanaians. So you have to make sure that before you go and acquire that kind of license, the shareholder of the entity are only Ghanaians. Now, the other side of deposit taking, and once you have a microfinance or savings and loans or banking license, you can also lend. But the other side of the deposit taking part is lending. There are certain fintechs, for instance, that all they do is lend. We know a few in this country. We've been fortunate to work with some by virtue of our relationship with UNCDF as well, where their business model is just a technology firm that gives loans. They have an application, you jump on the application, you put in your details, you put on why you want the money, and they will be able to make the disbursement. Now, if you are an institution, for instance, where you are only lending, let's be clear, please, the nature of the service, like I said, the nature of your offering is solely lending, then you will need, we will suggest, getting a lending license. The lending license are the microcredit institutions that you see around, the little ones in areas like that, where you will be licensed. Now, it's very easy for people to get confused when we talk about technology because they don't know where to go. We hear we have technology and therefore, should I go to the Bank of Ghana? Should I go to the SEC? What we are trying to say here is that you are supposed or you are required to find out what you're offering, see the nature of your business. So if you're taking deposits, then you know you have to go and get a deposit taking license. If you are giving only loans without taking deposits, then you are supposed to get a credit or a lending license from the Bank of Ghana. You will find that the credit or the lending license is usually tier 3 microcredit institutions. So for the purposes of understanding, tier 1 savings and loans have a minimum capital of 15 million at the moment. Tier 2 limited to only Ghana has 2 million as its minimum capital. Tier 3 micro lending has a minimum capital of 2 million cedis as well. So once again, it becomes a situation for you to check your pocket, check your weight, and buy the one that best fits your model. If the Bank of Ghana is also issuing any such licenses, please feel free to go and get them. Now, A fintech with credit lending as a sole major focused activity must obtain, like we said, a lending specific license to facilitate its core business. Now, as I was saying, I think I related to deposits, but licensed demis, you remember the big boys we talked about that have the license to drive the tractors, the electronic money issuers, and enhanced category of payment system providers have some provisions in the PSSA to offer lending, i.e. credit products, in partnership with duly licensed institutions. What does that mean? It means that it is possible under a reading of the Payment System Act for a dedicated e-money issuer or an enhanced category of payment service provider to offer lending products. However, you will still need to do it with someone that has a lending license. So these companies, even though you may get a payment systems enhanced license or an electronic money issuer license, you will still need to undertake this activity in conjunction with a licensed entity. So this covers sort of deposit taking. And like I've said already, tier 3 activities are usually undertaken by microcredit. Microcredits are the smaller ones you find around. You just make sure you have the license to go and do it. You find people that I found out recently that there's a very big market for loan sharking where people are giving loans out of their pockets and beating people to take their money back. Please, that's not the kind of advice we are giving here. And let's stay within the framework of the law. So that's that. So we've discussed payments as one element of fintech, the Payment Systems Act, the electronic money issuers, the payment service providers, as it were, and what you need to do. Like we said, we'll share the slides. We'll also share the links on our LinkedIn for you to have a look. And we'll be happy to advise anyone that needs any further clarity. We've also looked at deposit taking and lending. If you are providing a lending service, please, 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 no matter the way you frame it, no matter the structure of your technology, if you're giving people money at a premium or at an interest, then please get a lending license. If you are taking people's money, whether by brick and mortar or whether virtually by a digital bank or any other model where you are taking people's money, please ensure that you get a deposit taking license for the purpose of undertaking that that activity. Now, we'll turn to, having discussed those three, we'll turn to the regulatory regime for investments and insurance next. So where you are doing investments mean a lot of things to a lot of people, but the SEC has been set up to regulate and promote the growth and development of an efficient, fair, and transparent securities market in which investors have integrity, and investors and the integrity of the market are protected. What this essentially means is that the SEC is the guard hound for the capital markets. Okay, when we say the capital markets, we're talking about buying and selling securities. So where you buy to the public, at least. So where you're buying bonds, you're trading in shares, IPOs, all those kind of things. The SEC is usually, it's actually the guard hound for this. Now, what we are also seeing more and more in the financial technology space is that clients are also foraying into that space. People are looking for ways to add technology. So at first, people will go to their dealer, tell him, or call their dealer, tell him that, hey, can you make this trade for me? Can you buy this for me? Now, people are getting technology at their fingertips where they can literally just jump on an app and make trades. Now, you have to understand that the way this regulatory framework works is that even if you attach technology to a regulated activity, you will need to get the base license. I'll explain. For instance, we are having an advent of what they call in the West, Robo Advisors. These are robots that give investment advice. Here in Ghana, if you want to give investment advice or be a former investor, and when I say investment advice, it's not like, your auntie sitting around the table that tells you buy this, buy that, not that kind of investment advice. I mean, professional investment advice. You will need to be licensed by the SEC. Now, we have fintech coming to the fray where robots are giving this advice. We haven't seen that in Ghana yet, but in the West, robots can give you investment advice. What they have done in the West, especially in America, is that those robots are subject to the same regulatory requirements as the investment advisor that's a person. Why? Because this is a licensed or a regulated activity. I'm sharing this example to give you an idea that even if the activity requires a license, it doesn't matter what technology you attach to it. Please make sure you get a license. So for instance, we have clients that want to create stock exchange. So usually when we think of stock exchange in Ghana, we think of the Ghana Stock Exchange, or we think of GAX, the alternative exchange that we find. But that has changed. Clients are looking to sell and trade securities at a high level on applications. If the nature of your offering, again, requires anything that has to do with securities, the offer of securities to the public, please, let's be clear. We've discussed payments at one point, we discussed giving loans at another point, we discussed taking people's deposits. If you're, as a startup, anything you want to do involves the offering of securities to the public, most likely, well, securities advice, aid in the acquisition of securities, you are most likely going to require a license from the SEC. In the same vein, for the first time in Ghana, and I think I mentioned at the beginning, we had a National Insurance Act passed last year. And for the first time, they have the National Insurance Commission, which is the regulator for insurance, has included what we call innovative insurance business as a license category. What this means is that if you have any product that involves technology that enhances the provision of insurance services, well, guess what? Before, you didn't need to go to the NIC. Now, you will have to go to the NIC. So innovative insurance is insurance business that uses financial technology or any other innovative technology or method, including development of insurance product, use of data, and distribution of an insurance product. Basically, the idea is technology that enhances the provision of insurance. So like I explained earlier, we are seeing insurance companies go to technology firms to get data and face recognition software because they want to use it to determine life expectancy, right? So let's say you walk into the insurance person and tell them, hey, I have 245 more years to live. They will use this specific algorithm for the purposes of underwriting. Alternatively, some people are providing software to car rentals. So what they do is the car rental will put the specific technology under your speedometer, and it will be able to determine actually how much a person actually drove. You know, sometimes people can drive and then come and alter the speedometer. All these kind of technology that have gone to the purposes of insurance or aiding insurance provision have now all become regulated by the NIC. And this is another sphere in which regulators are playing, and you have to be cognizant of. So like I said, I will repeat again, what you do when you break down the frills, you remove the technology, you remove everything that you think is going to be the best thing in the world, and you break down your core offering, you will be able to tell who is the regulator I need to go to. Now, it's always not that straightforward, we admit. The regulator understands. We have situations where the software that you have brought, nobody in the world has seen some before. It's possible. And I'm sure there are people on the call that have this knowledge. I don't, but it's possible. Maybe Ophelia does. I don't know. The point is, it's possible that the information has never been seen or been heard. What some of the regulators in Ghana are doing now is creating what we call a sandbox. So a sandbox, for the purposes of what we are saying, is a regulatory sandbox is a framework set up by a financial sector regulator to allow small-scale live testing of innovations by private firms in a controlled environment, operating under a special exemption allowance or a limited period, time-bound, under the regulator's supervision. What does that mean? So let's say all these categories of stuff we discussed, where the Bank of Ghana usually helps you. You know, you're not doing lending, you're not necessarily doing deposit taking, something that you have is really, really fancy. Or the SEC says, listen, what you have or you're offering is not covered under the Securities Industry Act. what the regulators have done, and I use this picture for the purposes, if you think of it as children in a sandbox, they come and they just play around, they just get themselves dirty under the supervision, of course, of adults. That is the same idea here. Some of the regulators, and we'll explain in the next step, that admit that technology is moving so fast, we just cannot keep up. So what they say is that bring your technology, we will give you a special dispensation, as it were. Pilot your technology and we will make a determination on it. But there are certain criteria that will look at it. So it's possible that I'm not sure, but maybe something that would ordinarily be under the purview of the Bank of Ghana or under the purview of the SEC is so new, is so novel, is so unheard of. The Bank of Ghana and the SEC are saying, bring these things into our sandbox and let's make a determination on the regulatory framework. The first person that has a sandbox that you should be aware of is the Bank of Ghana. The Bank of Ghana launched its regulatory sandbox for banks, specialized deposit-taking institutions, PSPs and DEMIs, as well as unregulated persons that have innovations that meet the sandbox requirements. Now, what would these innovations? From a broad perspective, they are looking for new digital business models not currently covered explicitly or implicitly, under any regulation. Now, what does that mean? I think it's very important that, yes, there are express covers that legislation covers that deals with, if you lend, come to us. If you are taking deposits, comes to us. There's also, by virtue of the broad brush approach that the Bank of Ghana or the SEC is giving, there are implicit portions of their regulatory work. However, if something you are doing, some idea you have as a startup, anything you want to play with is so new, is, as it says, new and immature digital finance service technology, innovative digital financial services products, which have the potential of addressing a persistent financial inclusion challenge, then the Bank of Ghana is saying, bring it to us. Come and get regulatory approval in our sandbox. Don't go and do what you want with it. And as you will know now, the Bank of Ghana has been clamping down on a lot of tech companies that are really doing what they want without regulation. And it's also bad for reputation. So the Bank of Ghana is saying, bring it to us. Let us have an assessment of it. You have to be novel. You have to be new. You have to be groundbreaking. And we will be able to include it in our sandbox. Now, the SEC has a similar sandbox. Again, if you are offering any public securities, anything of that nature, the SEC is saying that bring your idea to us, apply into us. As a matter of fact, we at EGL have applied to the SEC sandbox for some of our clients. They're saying, bring your idea, like I said, bring your offering to the SEC and let them make a determination on whether or not it fits it. If it does, and it's not already regulated, you get, and you see, this is the sort of the blessing in this, you get the approval of the regulator, right? It's not clearly covered elsewhere. They say, come to us, we'll give you the green light. And when you start operating it until it's covered in clear legislative language, you will be fine to do that. And this is just sort of what you need to demonstrate to the SEC. It has clear potential to benefit the market. The product is genuinely innovative or applied innovatively and not similar to something that's already available in the market. So these, what it is here, we have co-regulation. Okay, thank you. We have co-regulation. We have situations where there are two regulators that regulate a situation. So you will find that just for equity and debt crowdfunding, if you are doing that, crowdfunding is borrowing money to go ahead, you will see that the SEC and the Bank of Ghana regulate it. So here we'll just do at a high level an overview of the things you need to know at incorporation. Take us just a minute or two. And then we'll open the floor for questions. My colleague, Jesse, will from here.
Hello, everybody. Thank you, Manuel, for the overview of FinTech. So now when you've determined where to go, as Emmanuel has already said, if you've determined which regulator to go to when you're in FinTech, what's next? General things to know. Now, the first thing that you want to do if you want to be licensed is to be incorporated. So you are either incorporated under in accordance with the provisions of your regulator, or under the provisions of, now the baseline of incorporation is governed by the Companies Act 992. However, there are other acts and there are other regulators that have add-ons, and we'll see that as we go on. So you set up your business, which is basically RGD registration. You go to RGD, who is responsible for registering companies in Ghana, partnerships, any other entities in Ghana. You do that. When it comes to registration and incorporation requirements under the PSSE, that's the Payment Systems and Services Act, fintechs must include their payments, their incorporation documents, and then they should include that they're a payment service provider or an e-money issuer. So if you are a payment service provider or a dummy, you've identified your offering and you've noted that, okay, so I'm a payment service provider, process money, or I issue e-money, then you have to incorporate and present your documents to the Bank of Ghana. One of the important things to include is that under the PSSA, you must include your object. So for a PSSA, for a PSP, your object is that you're a payment service provider. So you have to include in your company incorporation documents that you provide payment services or your payment service provider. If you're an electronic money issuer, you have to include that you are an electronic money issuer and that you hold the money in trust for your customers. It's very, very necessary. So even though the new Companies Act says that your objects are not limited now, the PSSA actually requires that you state exactly what you do if you're PSP, that you're a payment service provider, or that you're an e-money issuer and that you're holding the money in trust for your customers. Extremely important. Now, another important thing is Gipc registration, as we know, for a company with foreign. Now there are I think Emmanuel talked about this earlier. If you're a PSP standard, you have to be wholly Ghanaian owned. However, if you fall under the other categories, you can be partly Ghanaian owned now, or partly foreign owned. Now, companies or PSPs and dummies should have at least 30% local equity requirement. And from the Companies Act, we realize that, we know that if a company is partly owned by a Ghanaian or partly owned by a foreigner, you have to register with GIPC. The bank would ask for this evidence of this. So if your minimum capital, or if you're partly owned by a foreigner, then you should make sure that you invest not less than $200,000 into the company. Now, a PSP or a dummy can't be wholly foreign owned unless you're a bank or, as Emmanuel stated, a tier 1 micro finance, a lending savings and loans institution. Now let's talk about the shareholding as well. This is very important. And we've noticed that most of the companies coming in for licenses, this is where they have most of the problem. Experience with our companies and companies we've dealt with is that this is where we always have to pay attention to. And this is what Bank of Ghana particularly pays attention to. So if you don't even take anything away from today's webinar, and you're a PSP or an e-money issuer, you should pay attention to your shareholding. So for PSPs and dummies, as I've already mentioned, you should have a minimum of 30% local participation requirement. It's extremely important, unless you're a standard, which then is limited to only Ghanaians and should be owned wholly by Ghanaians. Deposit-taking institutions are also, which is a tier 2 microfinance institution, can only be owned by Ghanaians as well. Non-deposit-taking fintechs, tier 3 microcredit institutions should have at least 2 shareholders, with non-holding shares less than 10% of the total number of shares. Now, the other thing is that we have to be extremely, critical of, or the Bank of Ghana is extremely critical of if you're a PSSA, is a local equity requirement. Now, there's provision that you should hold at least 30% of ordinary shares, not just any kind of shares. You must hold 30%. The Ghanaian must hold at least 30% of ordinary shares. This basically means that your shares should not be limited in any capacity. You should have voting and dividend rights. You should be able to have a say in the governance of the company. And this is usually such a big deal for companies that are already, huge in other countries. Coming up, 30% is a lot. So giving out 30% of your company is usually something that we've realized companies deal with. It's usually the biggest standing block, and it's what Bank of Ghana particularly pays attention to. But we've been able to help so many of our clients deal with this while maintaining the control they need to maintain, but meeting the regulatory requirements as well. Another thing is that beneficial ownership of the 30% shares must be with Ghanaians. So the bank actually requires that you include an attestation from a notary public confirming ultimate beneficial ownership. This basically just states that, yes, it's ordinary shares and that the ultimate beneficial ownership should rest with Ghanaians. Now, there's a new companies under the Companies Act, and when you're registering your company, there's actually a requirement now that you should state ultimate beneficial ownership. So then that ultimate beneficial ownership in your company's registration must not conflict with the attestation you sign when you're giving your documents to the Bank of Ghana. Now let's talk about corporate governance quick. This is extremely important as well. So every company at the time you are incorporating must have at least 2 directors, one of which must be ordinarily resident in Ghana. This is the baseline for every company that wants to be incorporated in Ghana, whether or not you're fintech. However, when you're a PSP or DEM, you're required to have a minimum of 3 directors, a minimum of 2, including the CEO, should be ordinarily resident in Ghana. Now we have situations where companies are coming into Ghana, all of the directors are outside Ghana. The Bank of Ghana requires that at least 2 of your directors, including the CEO, should be resident in Ghana. This is extremely important. There's also the need for all directors to meet the fit and proper test by Bank of Ghana. Just mention this since I think time is almost up. We talk about financial integrity, reputation, experience, time commitment, collective suitability, and all of that. So your directors, it's extremely important because the documents you fill should meet Bank of Ghana's fit and proper test. And the bank will check. We've noticed that people coming in and companies coming usually think that, this is Ghana, it's an African country. The laws are pretty lax, but they quickly find out that the Bank of Ghana is extremely diligent when issuing licenses. So these are things that you can't do without. Now, fintech should also comply with additional qualifications. I think I've already stated this, the fit and proper test by directors, shareholders, and key management. Key management is usually refers to the CEO, which is the Chief Executive Officer. In your company, you can call this the Managing Director or the Country Manager, the Technologies and Systems Manager, the Compliance and Risk Manager, and the Finance Manager. So these are key management you can't do without. And then your corporate governance setup must be set up in a way that your compliance manager reports directly to the board. It's a very important thing. We've noticed in our experience with dealing with companies and dealing with the Bank of Ghana. It's also mandatory to appoint a secretary. Of course, you can't register a company in Ghana without having a secretary. Now, your secretary should meet the secretarial requirements under the law, which is basically you're either a lawyer or a chartered secretary, Now, there are other requirements as well if you want to be regulated or registered or licensed by any other regulator. But let's talk about the Bank of Ghana, because the Bank of Ghana has a very extensive regulatory regime when it comes to fintechs. As Emmanuel mentioned, most of these other regulators are now testing out sandboxes when it comes to fintech, or starting, as we saw, the NIC has a new Act 2021 that talks about fintech as well. But Bank of Ghana's fintech regulation, from the history Emmanuel talked about, it's relative to the other regulators, it's quite older. So it's the oldest in the space right now. So in addition to all of these other things, your corporate governance requirements, which is extremely important and which is what we realize companies usually fall short in. So that's if you will take nothing at all. Pay attention to your corporate governance, pay attention to your directors, pay attention to your shareholders. Now, other things would include your data protection certificate. So PSPs usually handle, and fintechs usually handle personal data. You process people's money, you either hold money, and all of these things require personal data. So you need to be registered with the Data Protection Center and have a data protection certificate. You must have an Anti-Money Laundering Act, extremely important. And this act should conform or be compliant with the Anti-Money Laundering Act of 2020. You have to acquire business operating permits from the municipal or district where your business is located. So a company needs this before it starts operations. Usually companies would pay attention to the tech and forget about everything else. However, this is extremely important. Also, companies should register with the GRA. All companies in Ghana must register with the Ghana Revenue Authority upon incorporation. You have to file your taxes, you have to file your annual returns, you have to pay taxes of employees. If you have any, you have to, it's extremely important. Do not evade taxes. Now, the other things are, social security and national insurance trust. Ghanaian law demands that all registered companies should register with the scheme and pay contributions for their employees. It's important that you don't skip this part. I know companies are always looking for ways to, minimize how much they spend, particularly on their employees. This is extremely important. Also, depending on the category you are going for, you have to obtain ISO certification, PSI DSS, and other third-party certifications as well. Now, these are the things that are required in applying for a license, whether it's with Bank of Ghana or some other agency, but particularly the Bank of Ghana and EUTF, because that's the hottest space right now. So we'll end here. I think we've already gone a little over time. We'll end here. If there are any questions or comments, Emmanuel and I can take those.
Thank you very much, Emmanuel and Jesse. I think we have a few questions in the Q&A. I hope you can hear me okay.
We can hear you, yes.
Yes, we can.
Thank you very much. The first question is from Adam, and he wants to know, do fintechs come under the Act 930?
No.
Sorry?
I'll take that, Jesse. So, as we indicated earlier, fintechs that are providing deposit-taking services. So 930 is the Banks and Specialized Deposit-Taking Institutions Act. So if you're fintech, I think what we're trying to explain from the beginning is the definition of fintech could play in different fields. But if you're fintech, right, is taking deposits, then you'll be governed by 930. Sorry. So I'll try and give very short answers.
Thank you very much. Another attendee wants to know if a private company can be an electronic money issue.
Yes, a private limited company. Yes.
Okay, great. So the next question says, the 20 million Ghana cedis, assuming we want to close the business later, I'm guessing, is it possible to get the money back?
Yes. So just for clarity, the 20 million that's involved is the Bank of Ghana currently treats half as integrity capital, so it'll be 10 million, and the other half goes towards your stated capital. So when you close your business, the Bank of Ghana will give you your money back.
Thank you. How much costs the PSPE, and how many times does it take to acquire it? Hello, Emmanuel, you're on mute.
Sorry, can you take that again? So the PSP is the enhanced license. Right. So in terms of cost, it's 2 million cedis for your minimum capital. It's 12,000 for your processing fee, 40,000 for the license fee, and 7,000 for the renewal fee. That's how much it will cost you. This is obviously minus any other advisory cost that you will pay.
Okay.
I think there was a question about time.
Yes, how many times
I don't know whether he means how long will it take to acquire it, but it reads how many times it takes to acquire it.
That depends. So the licensing process is a matter of collation of information to the Bank of Ghana's comfort. So however long it takes, it should be factored into how long the Bank of Ghana will take to come back, and that's very difficult to tell. So
Okay.
but we are happy.
The next question says, what is the difference between taking deposits and having a wallet as part of a payment system?
So taking deposits basically means you're soliciting for deposits from the general public. Now, anyone at all can walk into your institution and then deposit money with your institution. You hold that money for them. However, having a wallet, when we talk about PSPs or payment systems, usually refers to a closed loop wallet within your ecosystem where you can only fund the wallet with mobile, your other mobile money wallets, your bank accounts, your cards, or things like it. You can only use it within the PSP's ecosystem. However, a deposit taking institution, anyone at all can just walk in and deposit cash. But then a wallet within the definition of a payment system or PSP is that it's only used within your ecosystem. That's the difference.
Thank you, Jessie.
Emmanuel wants to know, are you saying aside a PSP enhanced license, I need a lending license before I can lend?
So when you have a PSP enhanced license, you can offer lending services when you partner with an institution, a licensed institution. For instance, you can partner with a bank, you can partner with a microfinance, and then offer lending services. So once you have a PSP enhanced, you can partner with other institutions that have licenses for lending, and then you can lend.
Okay. So next question is, microcredit institutions / lending licenses also limited to 100% Ghanaian shareholders?
Sorry, can you say that again, please?
Microcredit institutions or lending licenses also limited to 100% Ghanaian shareholders?
No. So for clarity, no, it's not. However, you have to have 2 shareholders, one of which should hold a minimum of 10%.
Okay.
Sorry, I just want to give a quick clarification on the minimum capital. So currently, at the time, the Bank of Ghana was taking 50% of your integrity capital for existing entities at the time of the Payment Systems Act. Okay. But currently, they are taking all of it. You get your money back when you close. So up you.
Okay. And someone is asking, what if I lend in collaboration with a licensed bank?
So I think Jessie has addressed that if you are DEMI or PSP enhanced, you can lend in collaboration. But again, the key point is the lending will be done on the back of the licensed entity. You cannot.
Exactly. Okay. So where is the one place that we can get a full list of fintechs under the licensing regimes? Is there a place that has all that information available?
So the Bank of Ghana issued sometime last year a list of licensed entities. I think it was 2021. That's the last one that's officially come from the Bank of Ghana. I'm aware that they're updating it based on the entities they are licensing. So you can get on the Bank of Ghana website. It will just be 21.
Great. And another attendee wants to know if their marketplace collects payments on behalf of merchants in a marketplace, do they need a PSP license and which one? And then if payment is provided by a bank, do they still need a PSP license?
So once you collect payments, once you process payments, you need a PSP license.
Which one?
You need a PSP. You need a PSP license once you collect payments. Now, it depends. I think we didn't talk about this, but when you're an enhanced, when you're medium or a standard, you need to partner with an enhanced to be able, so that you ride off the back of their technology and their systems to process payments. So they would process it for you. It depends on your business model, actually, and your offering and what you're able to. Sometimes 2 million is too much for certain companies, especially if you're a startup. 2 million is too much. So if you can start with a medium and then gradually, or standard, and gradually scale up to an enhanced. So once you process payments, at minimum, you need a standard license, but you need an enhanced if you want to process a payment yourself. Now, whether or not, I don't think I understand what it means by if the payment is provided by a bank, but you do need a PSP once you process payments.
Okay, all right. I think we'll move on to the chat and answer 1 or 2 questions from there. It looks like we're running out of time, so we'll just take about 2 or 3 questions from the chat and then bring the webinar to an end. The first question is asking, for purposes of obtaining a deposit license, a deposit taking license, do you consider the provision of electronic wallets as part of this licensing regime?
I think Jesse addressed it. Jesse, can you take that, please?
Yeah, once you take deposits, you can, and your fintech, you can create a wallet for your customers so that they can know how much is in their wallets. They can actually deposit and send money whenever they want. So once you're licensed deposit taking institution, you can have a wallet for your customers. Great.
Robert wants more details about the special category with respect to NIC, which he spoke about.
Mm-hmm.
Do you want to shed some light on the innovative insurance policy, just briefly?
Well,
yeah,
Jesse, I'll take that. I think what it is about the innovative insurance policy, we're yet to see it sort of roll out in these parts. And there are a series of innovative insurance that we will see. For instance, certain people run drone inspections, virtual auto claims, conversational artificial intelligence, insurer tech as a service. I think the key take home is that it's a service that enhances, a technological service that enhances insurance and insurance claim, then it will fall under that. The law is still developing, but there are a few ideas that clearly fall under that, some of which I just mentioned.
Thank you. And then the last but one question is asking where they can get a copy of the regulatory Sandbox license and guidelines.
They're usually on the websites of the various regulators. So for SEC, you can go onto their website and then find it. Most of these regulators are very good, particularly Bank of Ghana and SEC. They are really good with communications and directives. So once you go onto their website, you find all of their directives, all of their guidelines that you need.
That's great. Thank you so much. And the last question for today, Ralph wants to know if one needs both a fintech and deposit taking license to operate a savings product. And then his second question is about partnering with a financial institution to resell their product.
So the thing about a fintech is that fintech is basically just a company that uses technology to provide financial services. So when you say fintech, it could be a number of things. It could be a payment service provider, it could be an insurtech, it could be anything at all. So you'd have to specify, so be specific when you say fintech. Do you mean a payment service provider? And if you mean a payment service provider, yeah, a payment service provider can, or any fintech for that matter, can partner with another licensed fintech, say a deposit taking institution, to, offer goods and some services to their customers. The payment service, the deposit taking institution could partner with a payment service provider to process their payments for them. It happens all the time. Even banks partner with PSPs to process their payments for them. But when you say fintech, it's a very broad topic, so you would have to be specific about the category of fintech.
Right, and it goes back to the intro. What you do determines where you go. So
yeah,
that makes sense. Okay, any final words from Emmanuel or Jesse?
So I think, thank you so much on behalf of myself. Thank you all for joining this. We are cognizant of the fact that the space continues to evolve, and so will the conversation. We are happy to take this offline with anyone else that needs any further clarification as well. These things have nuances that we cannot address within an hour, 30 minutes. But like we said, remember that what you do will determine where you go. EGL also wants to thank UNCDF for this opportunity to knowledge share. We don't take it lightly, myself, my managing partner, and the rest of the partners in the team. So thank you again, and the conversation continues. Thank you.
Thank you very much, Emmanuel and the 8 Geeks team. Ariana, I want to know if you have any final words for our participants today.
Thank you, Ophelia, for leading this webinar. It's been very insightful, and on behalf of UNCDF, we'll continue supporting the fintech ecosystem. Thank you.
Thank you, Ariana. Thank you all so much for attending this webinar on navigating regulatory landscape for fintechs in Ghana. We hope you have enjoyed it. If your question wasn't answered during this live event, we plan to get back to you with a Q&A document, and we'll also share the slides and the recording with all registered attendees. So once again, thank you so much for spending time with us today, and wishing you the best day. Thanks.